Alrighty, what's up, wonderful people? My name is Salman. I've been day trading for roughly 7 years. I've roughly done $22,000 and some change in payouts in the last 9 trading days, which I've live documented all on my YouTube. And I've currently just scaling in trading. I own In the Circle, which is a group where we teach you exactly how to day trade and how to become a profitable trader relatively fast. So I'm going to leave that description in the bio if you want to take a look. We're running a 3-day free trial right now, so you can come test us out. Anyways, so let's get into it. In today's lecture, we're going to be talking about what is liquidity, how to spot it, and what specifically we can look for to identify high probability liquidity sweeps, right? So this is going to be episode 2 of the trading camp, right? I'm making this specifically for beginners, people who are kind of just looking to get into the marketplace. They don't know really where to look, where to go, and they just kind of want some resources to kind of help them and guide them through their journey. Liquidity, right? What is liquidity first off and foremost, right? So liquidity is a construct of an idea specifically around the basis of indicating a reversal, right? By the way, my bad for the background setup. I had to evacuate my home. I live in Los Angeles, so if you guys are watching the news right now, you guys see all the fires and stuff. So I had to evacuate my house because of the fire. But we're still getting to it. We're still getting to it every single day. Under any circumstances, I will still be here pushing you guys and guiding you guys towards better opportunity as a whole. But anyways, kind of yippee up there. But anyways, so what is liquidity? Liquidity is a construct of an idea specifically around the basis on where we can target continuations or reversals in the marketplace, right? So there's key levels in the marketplace that help us identify where price is going to continue and then as well as reverse, right? Typically, we want to be on more of over the reversal side, primarily the times that we see liquidity occur in the marketplace, right? But obviously, price is not black and white. Sometimes we'll get continuations off lows, and I'm going to essentially be showing you guys how you can ideally spot a continuation or a reversal and then identify liquidity as a whole. So typically, let me move my big ass face, lower that a little bit, put myself in the corner there. Right, we're going to start on a higher time frame basis, right? So this is my kind of blueprint every single day when I walk into the marketplace. And these concepts specifically will apply not only to futures, but to Forex and as well as other currencies to trade, right? The only thing I would say liquidity sweeps are not valid on are stocks, so individual stocks. So if you, let's say, are an options trader and you trade Apple stock or Nvidia stock, liquidity sweeps and the laws around liquidity sweeps specifically don't really apply so much so for options trading. But if you trade Forex futures and then options on, let's say, S&P 500 or NASDAQ, this video will apply for you, right? So specifically liquidity, right? So the first thing that I will do is I'll jump on a higher time frame, right, and identify the high time frame liquidity and then continuously drop down on time frames to identify where the most probable liquidity sweeps are, right? And liquidity, right, is not just marking out highs and lows, right? There's specific levels that offer liquidity. And the higher the time frame that you can go on, the more probable that that is a valid liquidity high or low, right? So for example, this is a liquidity sweep. Not liquidity sweep, but I should say liquidity, right? These are all resting highs that have resting orders specifically at these liquidity levels, right? What do we see here? We drop down on a lower time frame. What did price do, right? This low here, perfectly swept at what time? 10 a.m. So I'm not going to go too much into time specifically because that's time sauce is only for premium Discord members, and that's essentially how they are speedrunning profitability and how they're consistently getting payouts, all that good stuff. So I'm not going to go too much into time, right? Time's only for my Discord members because that is probably the key that unlocks everything. And that's one thing I'm going to gatekeep from you guys, sorry, because I've been kind of just looking for that supreme accuracy in the marketplace for 7 years, and I went through hell to get it, right? But I'll hint at a little bit. So we sweep this low at 10 a.m., which I'm not going to go into detail of, but 10 a.m., we come sweep this low. This is now low of day, and then we continue higher, right? Where do we continue higher? Into this sell side imbalance, buy side inefficiency. So this is a fair value gap. I have a lecture specifically on episode 1 explaining what fair value gaps are and how to spot them. So this type of fair value gap is a sell side imbalance, buy side inefficiency, right? So when we sweep a low, we want to either look for a other liquidity area to target or a fair value gap to target, right? So this is liquidity sweep. We come down, we sweep this low. Then from there, we are targeting here because there's resting orders in this, what? Sell side imbalance, buy side inefficiency, right? So we have all that marked out, right? So now this can still be used as a liquidity sweep, right? This low that got placed here after we swept this low can still be used as a liquidity sweep. The thing that is most important though is when we sweep a low like this and we come revisit that low, typically what will happen on price is we will continue lower, right? Because the overall context on the higher time frame is what? This liquidity level here. So what is price doing, right? We came up, realized the overall context is bearish because of what? This sell side imbalance, buy side inefficiency here, right? This is why it's important. Highs and lows aren't random, but we can identify when a high and low is going to happen and be used as a liquidity level when we are in a sell side imbalance, buy side inefficiency. And this is actually a higher time frame inverse fair value gap. So if you haven't watched my inverse fair value gap, if you haven't watched my fair value gap video, it's the episode 1 of the trading camp. I would suggest after liquidity, after this video, go ahead and watch that. Not going to go too much into detail on that because you guys can just go watch the other video. But anyways, so typically when we sweep a low like this and we come and revisit that low, we typically continue past these lows. And it's the exact same thing for highs, right? So for example, right? We place this high, we go lower, we continue higher, but then from there, what happens? We revisited that high. Same exact thing here, right? High, come lower, we sweep this low, we revisited this near high, and then we continue lower. Now, if we continue down towards this level, then from there, I want to see continuation to what? This liquidity level, because there's resting orders being placed at this liquidity level, right? It's the same thing for weekly, right? Typically, you don't really see weekly liquidity sweeps happen. There was this one in August, right, with these lows. But typically, weekly liquidity sweeps are very high probability to actually play out, but we don't relatively see it happen very often. Anyways, so what I do, I go in a higher time frame, I identify my liquidity levels, and then from there, if the time is right to trade those liquidity levels, then from there I'll execute based off of my daily bias in the marketplace, right? So if we go down on a lower time frame, right? Then from there, from the daily, I then want to identify 4-hour highs and lows, right? So the thing is I see a lot of new traders, they'll come into the marketplace and they'll say this is a form of liquidity. And I was a victim to this as well. I used to think this as well. This is not a valid area of liquidity, right? There are no orders here. There are orders here, but there's no orders here, right? So why does price, right? These are valid liquidity levels. Why does price continue to run these highs? Because the context of where price wants to go is not bearish. So if we go back on the daily, right? When we are at all-time highs, typically it's 1, not a good time to trade, and 2, we will continue higher because this is an example of a high resting liquidity run, right? I'm not going to go too much into detail on that either, because high resting and low resting liquidity runs are really good sauce that I only teach my Discord members. Right? These videos are just made for you guys to get a basic understanding of how the marketplaces ran. So I don't even want to confuse you guys anyways. But obviously there's reasoning behind why everything happens in the marketplace, which I talk about in my Discord. But for here and for now, I want to make this as simplistic as possible for you guys to understand, especially for my new guys, my new traders. So high resting liquidity run, right? Why does this form of liquidity on the 1 hour not pan out, right? If we go all the way back here, right? That was that same high because the overall context One, we are at all-time highs. Two, typically what happens at all-time highs is we'll just continue running higher, right? All-time highs as in the actual price of the commodity or thing that we are trading is at an all-time high, right? So a lot of traders will get burnt trying to go short in this area because we are at all-time highs, right? So I then will drop down a lower time frame, right? The 90-minute, right? Same reason why. Okay, why does this level of liquidity not end up panning out? Because the overall draw on liquidity for the higher time frame is this low here. So what ends up happening, right? Each area of liquidity gets invalidated, right? None end up holding up all the way down to where? Down to here, right? So this was the last swing low. Why was this the last swing low? Because the overall higher time frame objective in terms of liquidity was this low here placed at Friday, December 20th. Now, if we go back in time, now we are using these lows here as the high time frame objective. And what price is looking like it wants to do is continue to expand lower. But the thing that you have to be cautious about is on the higher time frame, if we just swept that low, typically this low will not get respected. Typically. Now, I don't know. I can't predict the future. All I can do is act when price tells me something I want to see. But when this low gets revisited, I typically want to see a continuation lower past these two lows. And that's what I typically see, right? So liquidity, right? These lows here, right? What do? We come to this level, we sweep it 10 a.m. I'm not going to give you guys the sauce. I'm sorry, guys, I have to gatekeep. But anyways, we sweep this low, then we continue higher. Why do we stop here and not sweep this high in this area of liquidity? Because we have a what? A daily inverse fair value gap plus a 4-hour sell side imbalance buy side inefficiency or inverse fair value gap, right? So if I go here, I map this inverse fair value gap out. Oh, would you look at that? We perfectly tap into it. Perfectly. Not by a couple dollars more, not by a couple dollars less. We perfectly tap into it. And then what does price do? We continue lower. And now we are going to revisit these lows, right? Price is fractal, guys. And what I mean by price is fractal is that the same model you can see on the daily, you should be able to see on the 4-hour, the 1-hour, the 90-minute, all that good stuff. And the more times you can see our model appear on more time frames, the higher probability and the more likely that that model specifically is going to work out, right? So I just got out of the shower, so my hair looks funky. But anyways, right? Why do all these highs get ran, right? Why are these valid forms of liquidity just getting ran and not getting respected and we're just continuing higher? Because of the fact the sequence of what price is doing is one, at all-time highs. Two, we are in an overall buy model here because this is a high resting liquidity run. High resting liquidity run at high points, right? We come up, make a high, come a little bit lower, come up, make a high, come a little bit lower, come up, make a high until the sequence of events then changes to a low resting liquidity run. And this is low probability conditions. This is high probability conditions, right? This is when the algorithm is turned on. We're catching good trades. We are overall eating. Discord's eating. Everyone's eating. This is when we step away from the markets and take as little as to none, and as little as I'm completely blanking on words here. As little to none in terms of trades, right? And trade entries. We want to just overall eliminate risk in these areas because our overall idea of the marketplace is low probability, right? Low probability price action in this general area, high probability price action in this general area. Why? High resting liquidity runs, which typically mean we don't respect the laws of the algorithm. Low resting liquidity run, we respect the laws of the algorithm, so we can catch high probability trades. Now, if you go and notice how everyone and their mother on different various social media platforms was saying that December's price action sucked, right? You go on Instagram, TikTok, any of the social media platforms, everyone and their mother was saying December's price action sucks. Now, I, as a trader, anticipated this and knew it was going to happen because the overall bias on the marketplace was a high resting liquidity run. And on top of that, we were at all-time highs, right? So that as me as an individual, I spot this and I say, okay, this is low probability market conditions. What am I going to do? If I find a trade, I'm going to take 50% of my typical contract sizing, and I'm only going to trade once per day because of the fact that these are all low probability conditions, right? Here, I can trade my full contract sizing. I have confidence every day because of the fact that the market conditions are solid, right? So this is a form of liquidity, and this is a form of liquidity. High resting liquidity runs, low resting liquidity runs. High resting liquidity runs equals low probability conditions. Low resting liquidity runs equal good opportunity and good entries that we can kind of find in the marketplace every day. So this is a form of liquidity people don't talk about. The reason why they don't talk about it is because they don't know what they're doing, and they're selling you a course and they have no idea what they are talking about, right? Anyways, those are the two examples of those PD arrays specifically and how we can spot market conditions using liquidity runs. And through liquidity levels, right? Liquidity levels are pretty standard, right? You want to mark out higher time frame draws on liquidity. And then from there, when the price and time align and the time is right to trade, right? I'm not going to mention time. I will never drop a video on time specifically just because it's too much value. I'm sorry, guys. I can't saturate that part. But time specifically, when the time is right, we will enter our trade if the draw on liquidity is correct, right? And we see our model present itself towards the overall daily bias of the draw on liquidity, right? And this way, this makes us we have a very clear mind, an open mind. We're not looking to rush trades. We know exactly when to trade, when to execute. We know exactly how to do everything, and we will continue to win, right? And have a high win rate by doing so because we have a very strict set of rules. This is exactly what I teach in my Discord. You have to have a very, 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 very strict set of rules in order to prosper as an individual. Because in trading, right, we don't have a boss. We don't have someone telling us what to do. That being the case, it's hard to stay consistent with your rules because why would you follow your own rules, right? Because majority of people try to rush the process. They end up over leveraging, over trading, and by the end of the trading session, they end up blowing their account. So rules are very important specifically, and the way that you can spot them is by having a specific blueprint on what you want to look for every single day. Now, in my Discord, I teach all my members what I look for every single day and what I anticipate happening in the marketplace previous day, right? And then actually live trading and executing with them based off of my overall thesis on what the marketplace is actually doing, right? I'm going to let my Discord members speak for myself. You guys can join the 3-day trial, join and look at all the testimonials, right? I've yet to have one bad thing a member has said. The single member has yet to say something bad. So I'll let my members speak for themselves. You guys can go ahead and just join the trial, right? If you guys don't like what you guys see, right? I'm not holding you hostage. You didn't already pay. You can just cancel at the end of it, right? If you guys don't like it. But I promise you this. You join the Discord. You focus on your craft. You focus on actually putting in the work. You join every day. We have a group call. You join that. Every day we do live trading. You join that. If you join those two and watch the lectures that are in the Discord provided every single day, I'm obviously not going to guarantee it because I can't guarantee anything, but I will say you will have a 10 times higher probability of mastering the markets than you would if you went on your own, right? Me as an individual, it took me 7 years to master this. It took me a very long time because I was stubborn to learn from other people. I said, I don't want to buy anyone's course. I hate everyone. So I seeked out my own knowledge from 10 different people and extracted what I like from them. And then from there, the rest is history. $22,000 in withdrawals in the last 9 trading days. That has been fully documented on my YouTube. You guys can call me crazy. You guys can call me whatever you want. You can go on my YouTube and look at all the withdrawals, all that good stuff. But anyways, guys, love you guys. I hope that liquidity video helped. I hope you got some value. I hope that you reach every single goal that you have set yourself up for 2025. And I hope you guys got some value out of that. But anyways, that's going to be it for this one. Go ahead and join the Discord if you want below. Come check us out. If you don't like us, bounce. I'm not holding you hostage. You didn't already pay. Just check us out. See if you like it. By the end of it, you're going to realize this guy actually knows what he's talking about. All right, guys. I'll go ahead and see you guys in the Discord. Love you guys. Later.